Good morning, YouTube. Finished doing my taxes recently, 128 pages, and as kind of an engineer person that likes the details, I went into the details, and I found a capital loss issue on the H&R Block Arkansas web form, which can impact you up to a $1,500 loss per year. And so I wanted to share it with you in case you had this circumstance come up. So I'm going to jump right into this. Here's how it happens, okay? On your federal taxes, you can take up to a $3,000 loss on capital gains sales. So if you sell stocks and you lose $3,000, you can take up to the $3,000 loss as against your income. As you can see from this website here, $3,000. If you're filing separate, it's $1,500. But if you're filing a joint return, which most people do if they're married, you can take a $3,000 loss. $3,000 can be carried forward indefinitely until it's taken. Okay, that's how the federal form works. Now, it sounds great, right? And I have looked down at the specific carryover lines for short and long-term gains in the tax forms for H&R Block, and it works year to year to year. They carry those forward perfectly. Here's where the issue gets in, and you need to be aware of it because you will lose $1,500 of this $3,000 loss that you can deduct in your taxes on Arkansas. Here's why. In Arkansas, most people do a filing status which is called married filing separately on the same return. There's a benefit for it, and it usually saves you money. But the thing you need to be aware of is when this $3,000 capital loss transfers to the Arkansas form, it transfers as $1,500 for you and $1,500 for your spouse. Now, if you're the primary breadwinner and she doesn't have that $1,500 in income to deduct the loss against, it just drops the loss. The loss is not taken on the Arkansas form, and it doesn't transfer back as a carryover for the Arkansas form to the federal form. And so you just have the $1,500 of the loss that was just dropped. So last year I had $1,500 loss in 2022 that I need to figure out how to claim that on the Arkansas form at some point in the future. And this year it had the same thing. Now, I looked at a few things to fix that loss. Now, all my dividends and interest were in my name originally, even though the accounts were joint accounts. And on the federal return, you can go back and you can split those up and say this is both her and my interest and dividend, or you can say it's hers, depending on your situation. And so I transferred and reappropriated those on my federal form and split it up, and it makes no difference on federal because you're filing a joint return. But when it goes to state, now she has an income. What I found was her income on those dividends and interest on the first $4,000 some dollars is untaxed. And so you should split those up so that both spouses can take advantage of the Arkansas tax bracket that they're in and that zero tax bracket. Now, the other thing I looked at was my dividends and interest were in the range that she was under the 1%, the 0% Arkansas tax bracket. And so then when I took the $1,500 credit deduction that we're talking about on both of us, her income wasn't reduced at all. Her taxes weren't reduced at all, even though her income was, because she was still in that low level of percent tax. And so I went ahead and did not reappropriate this loss to her, and I left the $1,500 unclaimed for now. And I put that on my tax form that I use, the spreadsheet, so that when you come to the year when those deductions are taken out, then I can re-add back that $1,500 of my Arkansas as an adjustment to my income. And so I wanted to share that with you because most people probably do not look at that level of detail on the forms or that situation, and it can cost you money on that Arkansas form. And there's those two things. One is spousal income. If your spouse isn't working, if she's a stay-at-home mom or things like that, having the income in both names, some of it, say dividends, interest, things like that, The second is handling that loss that comes over to her if she doesn't have very much income, or saving that loss for other years. But I just wanted to share this with you. It is a bug on the H&R Block Arkansas tax form, because there is no carryover loss separately for Arkansas tax form than there is from the federal, and so that would be a different carryover on that form. I'll talk to y'all later. Hope it's valuable, and